There's no more sellers, right? Sellers are gone. All the big leveraged bad guys are gone. And it turns out that I just did a presentation on this yesterday. Hash rate, new all-time high. Number of wallets, new all-time high. Number of wallets with greater than 0.1 Bitcoin, new all-time high. Transaction size and volume, not all-time high, but coming back to being close. And all of those fundamentals are and my point of my presentation yesterday was, crypto summer, surfing on a wave of global liquidity. China printed $1 trillion since October. Trillion with a T. Japan, another couple hundred billion. The Fed put $300 billion back on their balance sheet. So, we've got $1.5 trillion of liquidity sloshing around, and turns out people buy things that they like. And there's a whole bunch of people that like crypto, and Bitcoin and ETH are the biggest beneficiaries, but it's going down the ladder.
Bitcoin starts a new week under $30,000 as analysts' predictions of a short-term support retest come true. The largest cryptocurrency saw a classic dive following its latest weekly close as its latest gains evaporated. Will they return? Hello and welcome to Money Talks. In today's video, Mark Yusko shares with us his outlook for the crypto rally and his view on the recent U.S. inflation numbers and more.
I'm with you. I just look at the data. Right, the data is there's more buyers than sellers of ETH. ETH, I think, I think I have this right, over the past couple weeks has even outperformed BTC. I mean, it was up 5% yesterday. It crashed through 2,000 and hit 2,100 very quickly. So I kind of come down on the latter part of your analysis to say, yes, there's a legitimate fear that people would unlock or de-risk some portion of what they've been staking. But I kind of come to it as there's no evidence of that, right? There's just no evidence in the markets of big liquidations of really anything. And there's some lower level coins that have just been going batshit crazy. So I think it's interesting. Well, it's amazing, Michael, as you're pulling up that chart, it's amazing how no one's talking about inflation anymore. I mean, it's gone now. It's gone now. I mean, literally gone. I mean, if you do a Google search for, what is that Google Analytics thing for searches on inflation, it's gone back to nothing.
Ahead of a fairly innocuous week for macro data releases, catalysts are likely to come elsewhere as BTC price action makes a decision on a key support zone. Much is at stake for traders, as the week prior offered the opportunity to reinvestigate altcoins as Bitcoin itself cooled its upside. With a retracement now in effect, attention will be on whether those altcoins can hold at their own higher levels. Under the hood, it appears to be business as usual for Bitcoin. Network fundamentals, already at or near all-time highs, show no definitive signs of a come-down of their own this week. It may be too early to determine how the price performance will impact holders, but the temptation to sell at 10-month highs must be clear. The percentage of the overall BTC supply now in profit is at an impressive 75%.
And that's exactly, look, that's why Saudi cut production, right? Saudi has said, you know what? We got new friends. And these new friends, they treat us better. And I think we're going to look back 10 years from now and what this current administration did to mess up this, 50-year relationship with OPEC and Saudi. People are going to, it's going to be shocking. It's going to be shocking. Webinar with our China team the other day. And, a month ago, we sent our analyst out with this iPhone and she took a picture and it was like a neutron bomb. I mean, there was no one on the streets. There was no cars. And she went out a couple weeks ago, same spot. And it was like it never happened. I mean, smog, cars, no one, everyone was out, big shopping bags. So that's, I think that's going to get fixed. And I think the shelter thing is, look, owner's equivalent rent, I've always thought was a dumb concept, right? The rent you charge yourself to rent your house from yourself. Okay, but it just doesn't make any sense to me. And I understand why they took housing prices out and put that in, because it's more stable and they can control it. And I get it, because the goal of the government actually is to have the lowest CPI number possible, full stop. And so the fact that it went up and that they lost control is telling, because, and the reason they want it low is all of the entitlement programs are linked to CPI. And that's why CPI has been manipulated. If you go to shadowstats.com, John, I can't remember his last name, and if you calculated inflation the way we did in the 80s, we're at 10%. If you did it the way we did in the 90s, we're at like 12 or 13%. And I don't really think that's true. But I'm open to the idea that, look, housing prices probably should be a meaningful component of this quote unquote idea of inflation, because it does imply the ability or inability of the average family to, own a home, buy things, that's real. And, the average young family today has basically been priced out of most markets, especially with rates now where they are. There's just no way.
Bitcoin may be far from its all-time high of $69,000, but one metric rapidly homing in on repeating the climate of November 2021 is the Crypto Fear and Greed Index. The return to $30,000 was marked by a rapid increase in greed throughout the crypto market, its data shows. As of April 17th, fear and greed has a score of 69,100, just 10% away from its 75,100 mark from when BTC USD traded at its most recent peak.
I think the economy is slowish. I think first quarter number is going to disappoint. Fourth quarter number got revised down. Still not horrible. And the last year, even though they're not going to call it, was a recession. It was a mild recession. 1% year over year, 0.9 year over year GDP. That's recession. That's a 2001-esque recession. And I think in the absence of the global wave of liquidity, right? Had China not printed $1 trillion, had, Kuroda-san as his, going away president, not printed another 200 billion, had the Fed not stepped in with Silicon Valley at all with this BTFP, I would be more negative on growth. I would say, negative GDP growth in Q1. I would say negative GDP growth in Q2. I don't see that, right? I see a one handle in Q1. And look, I think the biggest indicator is the 10-year. The 10-year yield has collapsed, right? It's down from 4 something to 3.4, something like that. And that's telling you that growth is decelerating, not accelerating. Yet, if you look at Chinese liquidity provision forwarded 6 months and PMIs, it would tell us that PMIs have troughed.
So, what are your thoughts about Mark Yusko's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.